in wording such as, you actually do not know if you're reading my mind, where you said 25% of the resort tax, it's a property tax reduction for taxpayers in the city, which is always like the taxpayers in the city are they residents. They're not, right now, we all know that there are taxpayers with properties within the city limits. And and I'm wondering if there is a chance to, since we're asking the voters to vote on a matter such as the resort tax, if there is the chance to figure out a way to say that 25%, given that the council decides, goes back to the residents. And in the city limits, it's easy. They're registered voters. In the state of Montana, a non-income taxpayer will not file a state of Montana income tax in all cases. So they won't have an income tax that says I'm not a resident, unless they produce an income in Montana and they have to file it in Montana. But if I own an investment property here, and I do not produce an income here, and I can file in Florida, and I do not have to file in Montana, so I am invisible to the state of Montana, and I would be invisible to the city. I'm adamant about the fact that we're going to the voters, and I think it's time to consider rebating this money to the residents and not to the property owners that could have 20 properties and they live in another state.
I would just state that the 5% has to go to all property owners because state law reads, annually anticipated receipts from the resort tax must be applied to reduce the municipal property tax levy for the fiscal year in an amount equal to at least 5% of the resort tax revenues derived during the preceding fiscal year. So 5% of our resort tax must go back to all property taxpayers, regardless of residency. They pay property taxes, they get the rebate on their property tax bill. That other 20% is what you guys have the flexibility from a policy decision if you think that the voters will approve that. So there would be an additional cost to the city. You know, one position you're probably looking at with benefits and assuming it's not a significantly high paid position, you're probably looking at $70,000 still.
I would look at the picture in a larger way. We are not rebating 25%. The lowest we've ever rebated is 36%. Am I correct? Mm-hmm. So when we're talking about—
in the most recent years, sorry.
Yeah, in the last 5 years, the lowest has been 36%. We've rebated up to 46% a certain year, if I remember well. So when I think of me as a voter, voting to take 10% of that, 3% to community housing, I'm all for it. And then I read that the city finally, when they decide what their budget is, whatever is left of that budget that is not going to be spent, either be 25% or 48% of the resort tax, they will take only 5% and give it to the people who are not part of my community. And all the rest is going to be shared amongst us, not the remainder between 25% and 5%. So I bet you that if we look at the general fund or the budgets, those $70,000 will disappear if we save the delta between 48% and 5%, or 36% and 5%, on 33% that are the properties that are owned by people who are not in the city. So that's why I think it's a good time, for the same reasons you're stating. I think it's the other way around. We can tell the voters, you know what, we're going to give 10% for housing, and guess what? You live here, you pay all around, you're going to get the remainder, and we take only 5% and give it to the people from out of town.